LVMH has lost 250 billion in value over the last 2 years. That's more than the entire worth of companies like Nike or McDonald's. Welcome to the Value Investor Show, and today we're speaking about LVMH. This isn't just another stock breakdown. I've spent over 10 years studying Warren Buffett, and right now LVMH is ticking every box in the playbook. They have a durable brand mode, they have proven management, they have temporary headwinds, yes, but they're a long-term compounding machine. And in this video, I'm going to show you why I'm adding LVMH to my portfolio using facts and not hype. And I'm going to walk you through my custom build valuation model that shows just how undervalued the company is. So for today, I'm going to talk through what is LVMH, what are the current risks and opportunities, what is the stock performance right now, and what is Wall Street talking about when talking about LVMH, how is the leadership shaping up, and what are the financials and my projections on what the price should be and what the price will be in the next upcoming years. So let's start with the basics. So I'm sure you all know what LVMH is, but for those who don't, it's the largest luxury group on earth. They own Louis Vuitton, they own Dior, Givenchy, Moet, Rimowa, Tag Heuer, Loro Piana, and I could still go on and on and on. As you can see on the right, those are the number of brands they own, and I'm sure you can at least recognize at least 10 of those brands, the very least. Um, and the man behind all this is none other than Bernard Arnault, Europe's richest person and the quiet mastermind of the luxury world. With over 10 billion in cash, LVMH, in my opinion, are defending that market share but is also haunting. They have historically bought, undervalued brands or brands with extreme growth potential. I truly think that they're looking for the next opportunity. And with the stock being down 50%, they are under some pressure to find innovative ways to really get back on track. So, at what point does it get too cheap to ignore? Let's look at this video.
We know that the industry is under pressure, whether it's coming, where it's troubles coming from the U.S. with the threat of tariffs that are impacting consumer confidence, or also the downturn that we've seen in China. But there are internal issues at LVMH, and that's notably at two key assets. That's Dior and also Moet Hennessy. Both of them have been, culprits of hiking prices too much over the recent past, and now there's basically what we're noticing is that there's a consumer backlash. At Dior, which is led by Delphine Arnault, so that's Bernard Arnault's eldest child, there was also a supply chain scandal last year that generated a lot of bad press. So in the past, since LVMH shares reached a record in April 2 years ago, they've lost about half of their value, but that hasn't prevented Bernard Arnault and his family from buying the equivalent of more than €1 billion since the end of January worth of their stock.
Okay, so a lot's changed in 2 years, Angelina. Talk to us about the conglomerate discount then that is applied to this business. Is that how the market is thinking about it?
Yes, indeed, Anna. I mean, LVMH is a conglomerate with 75 brands. And when you have a rising market, investors are more willing, perhaps, to ignore that conglomerate discount. But once it starts shaking, they pay more attention to it because they're invested in very different industries. If you think about hospitality, they have hotel chains, but also they own restaurants. Of course, they own fashion and leather goods. And when
Perfect. So, key takeaways, guys. Number one, the stock is down, but it's not the only stock suffering. There are other stocks as well, which with similar nature, like Hermes, that are also suffering from the downturn of what we call a slowing demand for luxury goods. And another key point was that over the last few months, the Bernard Arnault family has bought 1 billion worth of stock, like from their own family money, which really shows their long-term commitment to this company. And the third is around the risks, which I'm going to touch base in just a second. So jumping into the four major risks, which have caused investors to sell this company. The number one is, as I said, slowing demand. Consumers in China and the US have pulled back on luxury post COVID, but this it's cyclical. It's not structural. After 2008 and 2020, after the COVID pandemic, LVMH did bounce back stronger than ever. So this is just the structure, and it's not the first time that it has happened. It has happened multiple times. And LVMH is trying to focus more on Gen Z, focus on collabs with brands like Supreme and F1. And I really think that they are positioning themselves to combat this in the longer term. Now, the second part is EU tariffs. The EU US trade tensions could hit LVMH hard, especially in the spirits division, but negotiations are all ongoing, and there is recent signal that suggests that the de-escalation is likely. And I really think that the European Commission will try to get on the right side of Trump, and I think the easiest example to justify this is NATO. NATO allies 2 days ago agreed to boost defense spending to 5%, from 2%, which many are not hitting, to 5%. That shows that they're willing to go against what they have been doing until now in order to get to the right side of Trump. And I truly believe that the EU will also do the same for the tariffs. And LVMH themselves, Bernard has been very vocal about it. They don't want the EU to go on a tit for tat war. They want the EU to come up with a deal. And given the fact that LVMH is such a strong brand in France and in the European Union, I really think that they'll find a way. I mean, in the worst case scenario, they can adjust LVMH can adjust the pricing, and they have already said that they can adjust the pricing a little bit to account for increases in cost due to the tariff dynamics, or they would absorb the impact. But again, my opinion is that they're closer to a deal than not. The third risks is that there is less alcohol consumption. And this is a Gen Z structural problem, in my opinion. Yes, there is less alcohol consumption, and yes, this trend is probably going to continue. But with that being said, if we look at LVMH and how the company is structured, the company currently consists only 9% of their revenue is within wines and spirits. This means that even a 10% drop, which is realistic, even a 10% drop in alcohol consumption causing a 10% drop in wines and spirits for LVMH would essentially mean a roughly 1% across its whole business. So it's not a big hit. And yes, I do think that it's gonna continue, but the company is so well diversified that the impact will be marginally small. And the fourth risks is competition. There has been a lot of hype recently with Hermes, with the Birkin bags, but to be fair, LVMH has always been the best at focusing what they do and delivering great products. And competition has been there for years, for centuries. It doesn't matter as long as the leadership delivers on what they say they'll deliver. I think the company is well positioned for the long term. In fact, Bernard Arnault said in 2021, when the stock was really at a very low, that we don't really worry about too much profitability. If you do your job well, the profitability will come. And to his credit, 2 years later, the stock price doubled, the company was more profitable than ever, and the revenue of the company went to all-time highs. So the leadership is there. So now I want to show you guys what's going on with the stock. So year to date, the stock is down 30%. 1 year ago, it's down almost 40%. And over the last 5 years, essentially the stock has barely moved. It has lost most of the gains on the last 5 years. I mean, the all-time high was roughly around 900 euros. I have bought LVMH around this part over here when it was around 380. I have seen my position double over time, and now it's almost back to where it was. So I think this is a blessing in disguise. There's a lot. I have been buying quite a lot recently, and I truly think that at some point or another, this stock is positioned to rebound. I mean, the PE ratio is probably at the lowest it has been for the last 10, 20 years, and the market cap as well. So the fourth part I wanted to talk about is leadership. Bernard Arnault is 76 and plans to retire before 85. So who's next? Well, he has 5 children and they're all deeply embedded in the company. The most likely successor is Antoine, who is already leading several key brands among Dior. His son Alexander is also turning heads at Rimowa, and now he has been tasked to revive Moet. And this is and the reason why I wanted to bring this up is because this is not just succession, it's legacy. And here is what matters. As I said, the Arnault family have bought millions of euros, or sorry, billions in fact, euros of worth of LVMH stock in the last month. And when insiders, especially this family, when this family is pouring billions on the line and buying back their stock, that's a signal that they do think that the stock is undervalued. So Alexander Arnault, who was the former CEO of Rimowa, he has been tasked in a challenging assignment, in my opinion, to revive Moet. And Bernard Arnault not only has assigned his son to potentially try to revive one of the hardest part of the business right now, but also he's giving him 2 years 2 years to demonstrate results. And that means business. I mean, yes, it's a family business at the end of the day, but this shows that regardless if this is a family business, they take business very seriously. And within 2 years, if Alexander Arnault doesn't deliver on, turning Moet around, he'll probably get replaced. And that's what you try to look for when you look for great leaders in companies. This is what you're looking for: ruthless people who are driven by results and who want to drive long term and are not focused at all on short term volatility. And now for the final part of this video, I wanted to walk through the stock price of LVMH. So LVMH today is doing roughly the same revenues as it did 2 years ago, but the stock price is half. The stock price is half. So when I run the numbers in my valuation model, even with conservative growth estimates, so 3% revenue growth in estimates, and keep in mind that for 2025, I have already accounted for a decline in revenue here, as you see right here. Even after that, with a modest revenue growth of 3% and an a modest EPS growth of 7%, and an FCF's growth estimate of 12%, which are all very, very bearish estimates based on the fact that, based on the historical estimates and based on, how well this company has performed historically, the company is very close to the intrinsic value, which is 390. And now, if I was to increase this to a bit more of a base case, I would say, to, let's say, 6% revenue growth, 9% EPS, 15% FCF, it's very much close to the intrinsic value today. What that tells us is that we expect the company to potentially double in price over the next 5 years, because I've built the model in a way where the intrinsic value is also accounting a 50% margin of safety, and it also accounts for making sure that the intrinsic value estimates how much the stock should perform in order to hit double by the next 5 years. So we are very, very close to the intrinsic value. And I have also added Hermes here just for your for your estimates, for your view. And you can argue that Hermes is also undervalued. The fact is that yes, Hermes is a great business. I mean, when you look at year to year, both are great businesses, right? I mean, year to year over the last 10 years, they have both grown significantly. LVMH has doubled in size, Hermes has tripled in size. Net income has performed really well for LVMH, has performed better for Hermes, to be fair. For free cash flow, similar situation. I think the only reason that values Hermes as much as investors are is because of the profit margin. The profit margin of Hermes is roughly 25 to 30% compared to 15% of LVMH. However, I do think that there is more potential for LVMH to increase their profit margins, which essentially would also increase their profitability and potential to increase their market cap. But for me, the most striking part here is the fact that both companies, LVMH and Hermes, are valued at the same basically. I mean, Hermes is now valued more in terms of market cap than LVMH, but in revenue terms, they're roughly a fifth of what LVMH is. In a net income basis, they're half as much as LVMH is. And I truly think that LVMH is poised to outperform Hermes in many, many ways. And apart from all the revenue growth and net income growth, which is great, just looking at the return on assets, return on equity, return of invested capital, they're both performing exceptionally well. And as I said, yes, Hermes is performing a bit better. And I think having studied both their balance sheets, Hermes is much less asset heavy. They have much less debt. They're operating on much higher margins, which is giving them the edge in many of these metrics. However, for me, there are a few things that I like better for LVMH, and the first one is their price to book ratio, which is 3 compared to almost 14.5 for Hermes. I think they're a bigger company with a lot more cash in hand, which allows them to buy brands if they need to, which allows them to capitalize on opportunities, which allows them to be more aggressive in the coming months. And I do think that Hermes is much more driven by trends, by some trends like the Birkin bag and some other trends around Hermes, which has worked for the better for the company over the last 4 years. But I don't know if this is sustainable, and I don't know if this is going to continue in the future. I have modeled it so that it continues in the future, but for me, Hermes here is probably a base to a bullish case, whereas LVMH is probably a base to a bear case here. So all in all, my final thoughts are that LVMH has erased 5 years of gains in their stock price, but the business is fundamentally the same. History shows that LVMH rebounds stronger even after downturns. And the question is not if this happens, if the rebound is happening, but will you be there when it does? And I will be looking to buy more of LVMH over the coming weeks. My current average stock price owned for LVMH is roughly 380, but I'm looking to add more in the 400s. So depending on how the stock performs over the coming weeks, I'll be buying more for sure. Thank you all. Please subscribe. Please ask me comments and questions in the comments down below. And moving forward, if you have any specific questions, I'll address them in the next episodes. Thank you very much.